Bankrupt, the bubble has burst. How many steps does it take from setting up a business to deceiving investors and fleeing? WM Motors founder, Shen Hui, has shown us in textbook fashion that it only takes 3 steps. The first step is to find a wealthy investor to lead the funding and create a new energy brand. The second step is to inflate sales figures, create false prosperity, and attract the attention of investor farmers. The third step is to initiate an IPO, return the initial investment from the wealthy investor, and split the investments of individual investors in half. This month, WM Motor, once a popular new energy vehicle brand, finally gave up after a year of struggle. The brand announced bankruptcy restructuring, and the founder, Shen Hui, is stuck overseas, with no indication of when he will return, or perhaps he may never return. People were astonished to discover that this entrepreneur, who claimed to be creating people's cars for Chinese people, is actually Canadian. Moreover, he has held Canadian citizenship for over 20 years, keeping it a secret all this time to build his image as a patriotic entrepreneur. Now that he plans to flee, he has openly declared his nationality and is seeking the protection of a foreign daddy. The only fortunate thing is that Shinhuis' escape plan is far from perfect. He originally planned to take away 1.2 billion yuan from China, but unexpectedly, his plan was exposed. Ultimately, he failed in his endeavor and returned empty-handed. So, how did this plan fail? We have to go back to the first step of deceiving investors. It is essential to have a famous reputation in order to deceive the investors, and Shen Hui did an excellent job in this regard. He took advantage of the Chinese people's admiration for German cars and promoted WM Motor as having German heritage from the very beginning. Shen Hui had worked in the United States and China for over 10 years. In the US, he was just a mid-level manager responsible for Chinese operations. However, upon returning to China, he became a senior executive and held positions in various domestic automotive companies. Later, with his wings fully spread, Shen Hui decided to start his own business and become his own boss. He acquired a niche car brand in Germany. How niche was it? Let's just say that it was virtually unheard of, even in Germany. The direct translation of the German brand name to Chinese, world champion, even felt inappropriate to Shen Hui. So he changed the Chinese name to Wey, based on the German pronunciation, emphasizing its connection to the popularity of BMW. Combining a Chinese automotive executive with a German car brand, WM Motor debuted at its peak. Shen Hui never had to worry about financing, as there were plenty of investors willing to offer him money. Tencent, Baidu, Tsinghua Unigroup, Honda Group, Li Ka-shing, and the Ho family were all lining up to invest. Each of these investors is a significant and influential figure in their own right, and their interest in WM Motor demonstrated the strong appeal of Shen Hui. With these major investors on board, the second step was to inflate sales figures and create false prosperity, laying the groundwork for the third step of going public. To make money, you have to spend money. Shen Hui, with his vast wealth, invested 10 billion renminbi to build 2 factories in Wenzhou and Huanggang. Other new energy vehicle brands were cautious about building their own factories without sufficient sales volume and instead relied on contract manufacturing with existing facilities. For example, Huawei worked with Seat and Ideal with Lifan. Even though WM Motor hadn't sold a single car, Shen Hui had already built 2 factories. Shen Hui's explanation was that he wouldn't be able to sleep if WM Motor relied on contract manufacturing. Translated, it means he wouldn't be able to sleep because the investor farmers, referring to individual investors, would grow too slowly. So, when the cars were produced but couldn't be sold, WM Motor took a different approach by selling cars to taxi companies. The advantage of this strategy was that taxi companies could purchase a large number of vehicles at once, artificially inflating WM Motor's sales volume in the short term and making their financial reports look impressive. In 2018 to 2019, WM Motor was even the second highest selling new energy vehicle company in the country. With factories and sales in place, they reached the most crucial step, going public and taking money from individual investors. Last year, an online rumor suddenly surfaced claiming that Shen Hui, the founder of WM Motor, received a yearly salary of 1.2 billion renminbi despite the company suffering cumulative losses of over 8 billion renminbi. This news sparked public outrage, and netizens criticized Shen Hui, suspecting his motivations for starting the business. However, this rumor was partially true and partially false. The true part was that WM Motor indeed incurred losses of over 8 billion renminbi. The false part was that Shen Hui did not receive a salary of 1.2 billion renminbi, at least not at the time. The condition to receive the 1.2 billion renminbi salary was to successfully take WM Motor public. Investors such as Li Ka-shing, Ho Hung-sun, Tencent, and Baidu, who had invested in WM Motor, were not naive. They invested in WM Motor with the expectation of significant returns in the future. So, why would Shen Hui receive a 1.2 billion renminbi salary without earning a penny? That would be insulting the intelligence of these savvy investors, wouldn't it? However, Li Ka-shing also knew the saying, where there's a big reward, there must be a brave person. He understood that he couldn't expect the horse to run without eating grass. So, he gave Shen Hui a blank check of 1.2 billion renminbi, encouraging him to go public sooner and cash in on his investment. To push for the IPO, Shen Hui pulled out all the stops. Initially aiming for a listing on the mainland's growth enterprise market, GEM, didn't work out, so they shifted focus to the Hong Kong Stock Exchange. But just as they were about to enter, WM Motor stumbled. In 2021, over a dozen WM Motor cars caught fire, and they only managed to sell a little over 70,000 vehicles. The probability of WM Motor cars catching fire was alarmingly high, indicating that there were indeed technical issues. Shen Hui, being full of ideas, knew that there were technical problems with the cars. He instructed his staff to contact car owners under the guise of offering free maintenance and secretly modify the car's software to reduce the battery's power and prevent fires. However, the trade-off was that the car's original range of 400 kilometers was reduced to only 200 kilometers. Car owners were furious and lodged complaints, even reporting the issue to the 315 Gala, an annual consumer rights TV program. But nothing came of it. The worst was yet to come for car owners. After Shen Hui fled, WM Motor was left without leadership. The factories shut down, employees sought new opportunities, and there was nobody to handle customer service. Car owners woke up to find that the WM Motor app no longer worked, and the in-car system couldn't connect. Their cars became useless bricks, and they didn't even know where to go for repairs. WM Motor's founder, Shen Hui, was skilled in capital operations. He had led a team at Geely to complete the largest overseas acquisition in the history of China's automotive industry, the acquisition of Volvo. He was also responsible for restructuring Volvo's global governance structure. As a darling of the capital market, WM Motor was once among the top tier of new automakers, known as the Four Little Dragons, along with NIO, XPeng, and Li Auto. After establishing WM Motor Group in 2015, Shen Hui built the first independently owned and fully operational Industry 4.0 smart manufacturing plant among new automakers in just 16 months, achieving mass production from product release. As a capital darling, WM Motor secured financing from many prominent investors as it entered the new energy vehicle industry. Despite failing to go public on the Science and Technology Innovation Board, Star Market, in 2021, WM Motor initiated a Series D financing round, attracting support from Li Ka-shing's CK Telecom and the Ho family's Shun Tac Holdings, and aimed to pursue a listing on the Hong Kong Stock Exchange the following year. Unfortunately, the review process for a Hong Kong IPO is stricter than that of the A-share market, and WM Motors' consecutive years of losses and the significant business dispute with Geely posed a potential risk to its IPO, Shinhui's social media circle stopped updating on November 17 last year and has been stagnant ever since. Prior to that, Shen Hui had extensive experience and background that indeed made him a suitable founder for a new energy vehicle company. He believed that the current situation of WM Motor was not solely due to his decision-making.